Many thanks, Raymond, and all of our panelists. I think my key takeaways for what matters for global cooperation is carrying out simulations, looking at intersecting sectors, attention to new risks, but most importantly of all, phone numbers. So let's move on to our second panel, which will also be moderated by Raymond, towards a complete banking union and a simpler framework that works for everybody. Our expert panelists are Karen Brown-Munsinger, board member at the SRB, Hector Grisi, CEO of Santander Group, Priscille Seratsky, president of the European Association of Cooperative Banks and deputy CEO of the Confédération Nationale du Crédit Mutuel, and Cindy van Oorschot, executive board member of the Nederlandse Bank. Please. Thank you.
Thank you. Please take your seats. We do not start this panel with the Slido. We'll have two Slidos later on, but on this panel we'll be talking specifically about the construction, the framework that we have inside the European Union in banking union and what it needs. And we saw already from one of the Slidos in the first panel that simplification is a key word that will come up over here. Simplification as opposed to harmonization. Are they different or do they go together? It's one of the things we'll be discussing in this panel here. We're looking back to the last 10 years. 10 years of single resolution mechanism, single resolution board. I'd like to start off this panel with a general reflection among all panelists. And maybe Karen, you could start. What do you think are the biggest achievements? What have we achieved in Europe in terms of the system we've set up?
So we're starting with the big questions, I see. Look, resolution has really grown up. You know, Dave was saying it earlier, and I personally really remember that sense during the global financial crisis of, you know, essentially authorities were a bit like deers in the headlight. We had to cope in a situation where we didn't have practice, we didn't have a framework, we didn't have a common language with the banking industry either. So over the last 10 years, we've seen the frameworks evolve, we've seen the clarity around what the framework means evolve. So what are expectations, what does that mean practically? Banks and authorities alike have built capacities to use the framework. We've developed the structures to be interacting with each other, discuss, debate, find solutions, and really laid that foundation of what resolution means and how we can get it done. So increasingly, we're already starting to see that now move into the practice, into the experience that we've just heard so clearly during that panel, but also a good moment to recognize how much we've done in terms of getting us to the point where we can have good practice, where we can have good testing, because we've laid the foundation, we've laid the basis of trust, and we have the common understanding.
Before we hear from the banking sector, I'd first like to touch base with the Dutch central bank, Cindy van Oorschot. How do you see the discussions in Amsterdam at the DNB about the banking union and the single resolution mechanism?
Well, first of all, let me congratulate everyone with the 10-year anniversary, quite a celebration. I think if we look back at, let's say, the journey we have had with resolution, so 10 years ago it was all new, sort of uncharted territory. So we had to build from scratch a resolution division within the Dutch Central Bank. And we did that with very great enthusiasm. I think even some of the members then of the team are also here today. There was also good spirit, or let's say urgency at the bank to contribute to a framework that helps to prevent, let's say, negative outcomes of the great financial crisis that we had. So good atmosphere, and I think it's fair to say that it was a genuine startup. And since then, I think we have cooperated quite well together with the SRB, together with the other NRAs. So we have made quite a lot of progress. And I think in terms of how we feel where we stand in Amsterdam, we've come a long way. We're not fully matured yet, but we're very, very well underway. Quite happy with the progress. And I think it's finally also fair to mention that also the institutions have done a lot. I mean, they have seen additional new requirements come their way as well. And they put their shoulders under their roadmap to resolvability as well, like we did as authorities. And I think that's a good thing as well. Yeah.
GSIBs are, of course, on the top of everyone's mind primarily. We'll come to the smaller banks later on, Priscilla. But let's go to Santander first, one of the biggest banks in Europe. Hector, how does your interaction with the SRB look like?
Thank you very much. A pleasure to be here, and congratulations on the 10th-year anniversary. I believe that we all can say that it's a success what we have seen for the past 10 years. I think, first of all, I would like to say that in these past 10 years, a lot has been achieved, okay? First of all, I think full resolvability has been achieved in all the banking institutions that are in the Union. So it's a quite important achievement that basically gives us the basis to continue to transact in an environment that is trustworthy, which is the most important thing for the banking sector. Second of all, I think the MREL targets are there. So people are basically seeing that all the banks have been able to get them to them in time, and that we are there. It was a long run since the beginning, but I think that we can call it as well as something that has been done. And we have a credible resolution tool. If you ask me about that, we in Santander actually had realized it. We have been one of the institutions that have participated in a resolution when Popular happened in 2017, that basically gives you the example that the vehicle and the way it was structured works. So I think that couldn't be a better example than that. And that customers and taxpayers and everything basically were all saved by this done in a very good way, in a very rapid way. So I don't believe there's a better example than that. I think that the evolution has been good in the sense that, I mean, we had a phase of 5 years in which we built the whole thing, and now we've been going through the nice evolution. And as Karen wrote last Thursday in her blog, which I like it very much, even though it's not a piece of cake, now we believe that simplification can come through and we can do it a lot easier. So that's something that I believe is important, that, and we will need to continue in that path.
Professor, you represent the European Association of Cooperative Banks, but also Credit Mutuel, and not among the very largest banks. Proportionality has been a word that has been floating around ever since resolution started coming on. Are your members pleased with what is happening at the moment? Is the framework that we have, is that workable also for the lesser significant institutions?
Thank you very much, Raymond, and good morning, everyone. And first, yeah, I wanted to thank the SRB for inviting me. It's always a pleasure to participate to a birthday party. I first wanted maybe, Raymond, to react on, you said the small cooperative banks. Cooperative does not mean small. We represent a quarter of the market share. We have 230 million customers in the European Union. So, like, to set the landscape, we play a strong role in, of course, together with GSIBs. My remark of the success that I've seen of the evolution from 10 years is first a remark on the method. What we have been appreciating very much as cooperative banks in that from the beginning that the approach was more rigid and prescriptive. We've seen a lot of dialogue and consultation coming, and it's more on the method, but it has a lot of implication on the resolution framework in itself and on its feasibility. And then what I've been hearing this morning is that the operational feasibility of the framework is so important. If you don't have this consultation, these understandings of the diversity of banking system in Europe, which is, I believe, our first asset, you cannot make it operational.
Indeed, that's something that we all should understand. I think we have a total of 6,000 banks in Europe. There's only about 100 directly supervised by the ECB, and there's many other banks in many different constructions. I mean, it's the fact of life that we have to deal with in Europe. Now, before we move on, we have a Slido question. And when we drafted this question, the question was, what would benefit banks most in terms of resolution? But we've amended the question to the following one. What would benefit the European economy more? Would it be fewer legal requirements for banks, basically simplification? Or would it be greater harmonization of the rules and the cooperation that we have among EU member states? And here are the votes coming in. We'll keep it open for the next 3 minutes. We have about 30 votes, and on the Slidos before, we had close to 200 votes. So we'll have more of that coming in. And this, of course, touches on the sensitive discussion between simplification and harmonization. Karen, you wrote in your blog post very clearly about this. They go together.
Absolutely. So if we look at what matters most, structural simplification, so having a clear idea of a common approach, is really the foundation of enabling then proportionality about risk-based approaches to be sitting on top of that. So if you look at this for the EU, let me take a very practical example. We have no harmonization in insolvency regimes. This makes life complicated for resolution authorities. I think it might also make life complicated for our banking industries. Is that something that can be addressed? Absolutely. And there you would actually get simpler rules through greater harmonization, and that might also result in fewer legal requirements. So we don't even have a trade-off here. We can have coexistence if we can get those structural decisions into the right place.
You also wrote very clearly in your blog post that there is a clear limit to simplification. Where do we draw the line?
Absolutely. So what I was trying to say there is simplification is not an end in itself, right? At the end of the day, we need to have a framework that works. We need to be able to make sure that every bank in every circumstance can fail safely, can be resolved safely, to secure financial stability, and to have a practical system. So within that mandate, then we look at the simple and most effective way of implementing it, but it can't replace that. So we can't, and I think particularly given the uncertain and rather volatile times we're facing at the moment, we have to be, if anything, more serious about crisis readiness, about being able to look across the risk continuum to be ready, no matter what surprises might reach us. And we heard in the first panel already that we need to deal with innovation in this context. We need to look at the non-financial banking industry also evolving. So let's be really serious about being ready for crisis. And within that, looking for the best way possible of adapting how we go about consulting, how we go about implementing our plans, so we can all focus on what's most important here and really deliver.
Priscilla, is the framework that we have too complex?
It has its complexities, but we will never, at the EACB, all our members are really clear on that we don't want deregulation. It's not a path that we will support, but we see room for simplification still. For also the rules to be clearer and to be more principle-based. We have this report called Less is More. I think only the title, you need to read the report, but the title is really clear. And we see it in the level 2, level 3, and also, and we hear it today, it's really good that there is a communication between authorities for not to have overburdensome reporting requirements. I see, like in the valuation capabilities, that there can be room for simplification in not asking for new reportings and relying on what is ready, what we already share with the supervisor. So this could be, I think, a good room for simplification and to react on the proportionality principle. That is something that, of course, we support. It's not only on the size of the institution, which matters, but it's also on the risk appetite, the business model, the kind of market that it operates in. All those elements of knowledge that you have on our banks should have an influence on the way you dialogue with the bank, on the way you want it to implement the resolution framework?
Hector, from speaking to a lot of different SRB people, we still see that there's a lot of pushback from the industry against the rules. Make it simpler, make it less, make it easier to understand, to manage. From your view, when you read what Karen is writing in her blog post on signaling a clear willingness to make it clearer and to take some steps where possible, but also striking a clear line, this is as far as we can go. How do you see that from your end in Madrid?
Thank you. I think that Cindy made a pretty good point. In what sense? That it's not that we're against regulation. I think it's very important that we clearly understand that regulation and good regulation is very important. As to have a very good system, trustworthy, in which everybody basically feels comfortable of what's happening. The most important thing about it is to make it very simple, all right? It's always been a choice in between if you have to have what's the right framework to be able also to be competitive. So that's exactly where we need to get to. And always to get the right balance is complicated, okay? We need a middle ground in which we basically get the right balance in terms of what do we need in terms of the regulation, how it should be, how it clear should be for everyone, and on the other side, how do we make it easier for the institutions to make it day by day, all right? And that's the important part. That combination, that balance, is the one that basically we need to observe. I do believe that also we have a lot of cooperation in between the SRB and ourselves in order to be able to get there. And communication is basic in order to be able to make it happen. And I think and I could say that we have a pretty good relationship, and they hear you on the other side, and likewise, here we basically hear what do we need to deliver, etc. So,
if there's one thing that Santander would like to see changed in the European resolution framework, what would it be?
Probably the most important thing is, I mean, the banking union would be tremendously important, okay? That would be create a framework in, as you know, we operate in different countries, and that would help us quite a lot in order to make it a lot easier. Second of all, I think we need a framework in terms of liquidity. Liquidity would be, in my opinion, it is important to acknowledge that—
You're talking liquidity and resolution, or liquidity in general?
No, yeah, but what I'm trying to tell you before is that you need to have and to create a framework to basically have a lender's last resort liquidity, because it's very important to see what just happened. It's not just 2008 or 2012. You need to look at what just happened in the US and what happened in Switzerland. And the problem was not capital at all. The problem was liquidity. So liquidity is an issue for institutions, and perception and trust is the one that is behind it. So if you have a framework that basically allows you to have that lender of last resort, you have a liquidity backstop that will really help you in order to sustain that with a union, with a banking union together with it, I think we'll create a really strong framework vis-a-vis what's going on with our competitors in the other side of the Atlantic.
Interesting to hear you mention banking union first, completing banking union first with EDIS, I assume. I understand that the absence of EDIS is making it difficult for European banks in the Eurozone to actually acquire or do business in other countries. We have this one example of a foreign bank in Germany not being able to use the German savings for investments or loans to SMEs in Portugal, for instance. And with an EDIS system, your integrated deposit insurance system, that would be easier for this bank. And this bank has since then pulled out of Germany. Is this something that figures into your perspective in terms of?
I think you correctly said it. I mean, fragmentation is the one that basically is not enabling Europe to be as competitive as the US banks.
So you're basically saying EDIS is a more important issue than liquidity and resolution?
No, I think that, I mean, we're talking about two different things, in my opinion. One is the competitive environment and what it creates, and how basically this basically will help you to be much more competitive. And another one is the credibility of the system and the lender of last resort and the liquidity situation when an institution basically becomes troubled, or in the perception of the public, it becomes in trouble, because sometimes it's not the same thing. So it's very important to that. That's why it's so important. Trust and credibility is the most important part of the system. That's what when I was talking about how important it is to have the regulation is tremendously important, because then it makes people and customers make comfortable of the system. So it's a combination of both. But at the end, one thing is different from the other.
Clear. So, Cindy, you interact also at the DNB with some of the Dutch institutions like ING, ABN AMRO. What is your view in the discussion on simplification and harmonization? And what type of feedback do you get from banks when it comes to the resolution mechanism?
Well, I think first we find it quite important to interact with them to get a good understanding of, let's say, what works in terms of the framework that we have and what doesn't. So it's really a dialogue that we value. I think we as authorities also needed to come up, not just by us, but in the end by, of course, the European Commission, but to come up with a very well-informed decision on what is, let's say, unwarranted complexity in the system, call it simplicity, but what is actually also maybe the complexity that we need to make sure that we have resilient banks and resolvable banks. So I think in essence what we get back from the Dutch institutions that some are, let's say, sort of proposals to make changes in terms of legislations. But I think a lot comes down to changes or, let's say, efficiency measures that we can already take in the framework that we have. So think about the, let's say, reporting side in terms of the frequency of reports, the data requests, also in terms of in the domain of the resolution planning. So at times they can be very concrete in terms of sort of measures that we can take already. So yeah.
Priscilla, on the cooperative banks in Europe, we have this huge variety. We talked about it, these 6,000 banks in Europe, as opposed to the 100 directly supervised by the ECB. Finding a solution that works for all in terms of creating a framework de facto means you need a relatively complex framework. Is that something that is recognized by your members?
You can have a simple framework, but a detailed implementation of it. And what we've seen, and I really think it's something that is very good about how the resolution is working today, is in what matters for us as a bank, and I will talk as Crédit Mutuel, is the discussion that we have almost every day with the international resolution team. And this is where the regulation should leave room for maneuver for what clever solutions that emerge from this day-to-day dialogue with this team that is the best positioned to know our bank, its functioning. Of course, it should respect the principle of the resolution that should be clear and simple, but it's different kind of ways to implement it. And this is true for cooperative banks, but also for all kinds of banks. And of course, for us, since we have this upside-down pyramid and detention of capital, it can be not easy to reflect it correctly in the regulation, but at least the regulation should not be drafted in the way it would be a hurdle to this kind of doing banking, which has proven that it's democratic, that it's for over 150 years working very well and serving communities and territories. You know, in a lot of remote areas, cooperative banks are here and now the last financial institution on the field. So we should have a simple regulation, not discriminating this kind of governance.
So how concretely should that look like?
The way it should be written, I think the framework, the way it is written today, allows this. Like we should be cautious in the level 2, level 3, in like every time we regulate, I think the authority should be sure that it leaves enough room for maneuver for those business models to exist.
And concretely, can you give one example of what could be done better?
Of what could be done. I would give first give an example of what worked good, if you allow. And a good example is the way the rail policy has been written, that it has, in the consultation process, we've been very much involved at the cooperative banks, and the way it is written allows, for instance, a downward adjustment in the hand of the IRT, of the Internal Resolution Team. So this is, and our model, and the fact that there is a diversity in banking business model was in the rail policy. So this is a very good example. And what could be improved, I already quoted the valuation program, so I think this could be more simple. Yeah, this could be a good example of simplification.
Karen, when you hear the ideas from Santander, from Credit Mutuel, what are your thoughts when you hear these concerns?
So first of all, I just want to recognize, and I think you put it well, that it's important to have that proactive discussion as well about how we make sure that the framework overall is complete and it works. And I just really want to share that sense around needing to complete the system. It's not about trade-offs between EDIS and liquidity resolution. We need the entire framework to be complete in order to protect the banking union, to have a strong Europe, and really enable that economic activity. You know, it's the foundation on which we stand. What I think we've been hearing is saying, now let's look at the practical application and use of the framework in how we go about doing that. And I think this is a point where we've really welcomed the consultation with the industry on a number of our really big policy developments, guidance developments over the last year. So over the summer, for example, we were talking quite a bit about how do we do testing? What does that mean? How can we make sure that it's tailored? And it's then, you know, where we have, I think, clarity about the direction in which we're heading. I was talking about this earlier, the foundation, clear, and I think there's a clear commitment by everybody to look at that practical execution. And then we can look at specific elements which enable all entities to be able to execute on that. The question, what does it mean to have a drill? Do you need to have a certain type of IT environment, you know, so how can we really target that? And it's through the interaction, the consultation, to have those quite practical elements that helps us make the framework effective. And I would really put the focus on that. You know, we also need to be careful in talking about simplification, that we don't destabilize a framework which people have put a lot of effort into building up, because there is simplicity and clarity and stability as well, enabling everybody to work within a given framework and really focus then not on redoing matters, but really executing and putting that quite operational focus onto our work together.
Hector, competitiveness is something that is very important for banks in Europe, including yours. How do you see what we have in Europe and what's going on now in the discussions on further fine-tuning of the resolution framework, the incomplete banking union? Is that a hindrance to being competitive on a global scale, or should we see that differently?
Look, I mean, you touch a very important point in that sense, no? Due to the fact that what is very important to have a homogenization of the framework, and that basically will help you quite a lot. What really hurts competitiveness in Europe is fragmentation. Imagine that, I mean, when you're operating different banks, you're not allowed to move capital, you're not allowed to move liquidity, you don't have the same framework in terms of the deposit funds, etc. So it's very complicated to handle that in a really fungible way, if you allow me the word. So what is very important, and we need to concentrate on, is to try to see how do we, and give a push to the banking union in order to be able to help us vis-a-vis of what's going on in the rest of the world. It's very important to have that. So, okay, so that's a very important part. I believe also that the framework, it has to allow you to have safety and trustworthiness, okay, because that is very important, again, to make the system basically work in a really good way. I mean, you were talking about 6,000 institutions. There's a lot of them, so you need basically a system that really helps you in what we do every single day. But at the end, the most important part is that you really need to create a system that I agree with Karen. We don't basically have to completely the regulator simplify. That's not the point. The point is basically to make it simpler in such a way that we can manage it quite easily and people understand it and understand how to take advantage of it in many ways.
We had about 20 years ago a lot of talk about the Financial Services Action Plan, a single European market for financial services. None of that discussion is taking place anymore. The reality of today indeed is we have a fragmented European market in terms of financial services. We do have an integrated European supervisory mechanism, a resolution mechanism. Fragmentation, that's a key word when I ask you about competitiveness in Europe. Is addressing fragmentation, and I'll put the question to you first again, is addressing fragmentation more important than fine-tuning the legal frameworks that we have for supervision and resolution?
If we address fragmentation, then we clear a lot of what needs to be clear in order to generate much more consolidation in the system, okay? To make it more feasible, to make it cheaper to operate, to make it actually much more competitive in every single way. At the end, even though we live in different regions, etc., globalization and the global framework is there. And basically, this is an open market in which everybody can come in and compete.
Is it an illusion? Is it utopia to have an unfragmented European financial services market? Priscilla?
Just maybe to say that regulation is not the solution to everything. And I think what appears in our panel is that there are a lot of solutions in the practice and in the political push as well as for fragmentation, because cooperative banks also operate on several member states, that we can see they're still persisting of ring fencing, of capital liquidity, and also in MREL application, like MREL solo compared to consolidating MREL. So those are issues that needs to be tackled, but not only by authorities, but I mean regulators, but also by politicians in the way they should give a real push. And we will support this.
And of course, it can be a wish list for European businesses, but the reality of politics today probably is that this is something very much on the long-term horizon. Should we see Cindy, should we see the frameworks that we have and the discussions that are going on right now about making these frameworks as simple as possible, as effective as possible? Is that an intermediate step on towards a longer-term goal, or is that just a reality that we're working with every day?
Let me think. A few comments to make on that question. I think in terms of the journey towards a complete banking union, I think on that journey you need, not sure whether the word simplification, let's say the reduction of unwarranted complexity, I would like to put it like that, is something that you need to look at any stage. So not just, let's say now or within 5 years or 10 years, I mean that should be on the agenda anyway. I think also in terms of competition, etc., what just has been said by the colleagues on the panel, I think for us as authorities, it's important to at least make sure within the role that we have that we create level playing field, that everyone knows what the requirements are, how the system works, what the requirements mean, and that it's even, that it's level, and also that in practice, that we work in the same way so that you can count on how things are done in the Netherlands are also done, let's say, in Spain or elsewhere. So I think that would be my, my instinct on this, yeah.
Let's go to the next Slido. We have a Slido question on banking union. and basically asking the audience, get your telephones out again, go to slido.com. What do you see as the main barrier to completing Europe's banking union? Is it legal fragmentation, political resistance, complexity of safety nets, or the lack of institutional trust? And I think everybody agrees it's political resistance that we're facing. Karen, from your perspective, is this just a reality you have to work with, or is this something that you see from a different perspective?
So 2 thoughts here. So first of all, I think it's worth coming back to where we were today to recognize that we are seeing banking union in practice every day, and it's really working. And I want to start with that because I spend a lot of time sitting in a room with a lot of people with very different backgrounds, coming from very different societies in terms of their expectation about how you should be doing crisis management, how you should supervise. And the working together is building that banking union every day in terms of how we can build trust, how we can get to a better place. In terms of completing the banking union, the steps that we discuss here touch on society. They're not small technical features, which we can just get into a room and agree. It's really about taking further steps towards integration into harmonization, and for that we need society to come along with us. So, is a political resistance or is a political will? Clearly, it has to stand on political decision-making, societal decision-making, in order to have the support of the EU. I think, but having said that, I absolutely see so much potential for this to help the EU tackle the questions that we're facing at the moment. The point about competitiveness, but also in general being able to cope with the challenges that we have. So maybe the more interesting question is to say, what can we do to help us get to the point about completing Europe's banking union? I think we can all see that political will is part of the equation here. And for me, it's that combination, on the one hand, demonstrating that the pieces we have here are working, that the cooperation is helping us to get to a place where we can have supranational, good, cooperative, collaborative solutions, that we do not need to hold on to all of the barriers to free capital and liquidity flow cross-border, because we have coordinated ways which will deliver solutions for the EU, but also for member states, that we really take more and more steps towards having that positive, proactive agenda about not what the barriers are, but how can really help us solve problems. And I believe the banking union is one of the greatest enablers we have. It doesn't solve all competitiveness issues. Clearly, we are part of the picture, and I think Priscilla was saying it. In order to then have the economic activity, you need the economic actors to then be able to execute on that basis. We can make sure that there can be innovation. We can make sure that there can be good activity in the market because there's a safe place to fail. There's a safe way of dealing with it. The activity itself needs a lot beyond that.
But Priscilla, to what extent is banking union and its incompleteness and the absence of EDIS discussed in the boardroom at Credit Mutuel?
I think if I want to see EDIS being born before I get retired, which I don't know when it will be, since there's a lot of debates in France at that moment on this, but this is not the matter today. But I think we need a complete shift of minds. The 2 first pillars were a big shift. With EDIS, it's kind of a revolution, because we see on the ground in our banks still a lot of resistance in capital and liquidity waiver, and I think there is this need, and for me to achieve the banking union, also we need to be curious of what is happening on the other side of the banking union, and it has been said a lot with the non-banking financial institutions, but also like all the payment establishments and all these companies that are taking market shares slowly, I mean, not so slowly anymore. We really need to be curious on what's happening there. Otherwise, we just create a beautiful castle with beautiful walls, but the business will happen on the other side of those walls. So this is something that the level playing field, which is, we repeat it a lot, so maybe it has lost a bit of its meaning, but it means that we need to have the same rules with the same activities. And this is, those actors really needs more scrutiny and to have better regulation as well. I used to work in restructuring, in corporate restructuring before joining Crédit Mutuel. And in these moments, like those hours that you need to set the deal, the creativity, the curiosity that you've shown before is really useful. I mean, it's not only applying the rules, it's really being creative. And
Hector, your perspective at Santander, of course, is far more global, if I may call it that way, with a heavy presence outside the Eurozone, outside the European Union, in the UK, also the US. When you see these discussions, when your board sees these discussions on banking union at the European political level and the lack of political will, do you shrug your shoulders or do you think something else?
I mean, I always have a positive attitude towards that. So we try to be optimistic about how do we see things. And we try to realize that the political environment needs to be there. But the most important thing is the political will. This is a situation that is not technical, okay, at all. This is a situation that is basically, we need to get alignment, and we really need to things that could really work for us all and not for independent states. And that's the biggest challenge that we have in front of us. To make this really work, we need a lot of political will in order to make it happen and to see it for the long term. I'm completely sure that if we do the right things in the long term, Europe could be very competitive. We have everything that it takes in order to be, and as you say, we operate in different parts of the world, and we see how we can be competitive in many ways, and we can be ahead of the curve, but we need the political will in order to be able to be there. So it's quite important that we get there. And we also need some more things, no? We're in a coherent framework, as we were all discussing. The level playing field is tremendously important. We need to understand that we are global players, and also we have global competitors in our markets. It's not just that we compete, I mean, as Santander, we compete in many places, but we have our competition here in our turf as well. So we need the same level playing field to be able to play at the same level. Also, it's tremendously important to understand that when we have investments outside of Europe, the level playing field is quite complicated, given that we have to comply with the rules on the outside and in the inside as well that make it very stringent sometimes to be competitive in those markets. So this is something that we ought to understand if we want to move ahead and we want the European banks to be competitive in those markets, which I believe is the case because that diversity gives you a lot of strength and a lot of balance on the long term. If you see, for example, the resilience of Santander vis-a-vis some of our competitors with the diversification that we have is tremendous. So that really helps you when you try to balance out what's going on in there. And for the regulator, it's also important. And I believe the regulator understands and has seen that. And also, I believe it's important to try to see how do we simplify the capital rules in order to make them more feasible to be competitive in that sense.
Karen, just one brief final question on banking union. We have CMDI, progress being made, credit crisis management system in the last few months. We're close to a political agreement that is seen overall as a step towards EDIS. Would that make your life at the resolution mechanism different if that is finally agreed?
So certainly we very much welcome the progress on CMDI and the crisis management apologies, directive. It has a number of very helpful elements in it, and it's good that we're seeing this conclude. But I think we should be really clear. This was about looking at the system for a number of very specific banks in order to improve specific elements about how we're able to execute, about how we look, for example, also at DGS. It is not the banking union. So in the terms of completing EDIS, that is a separate thing, a separate commitment in terms of political will. So while it is good to conclude that process as simple as possible, we hope, with co-legislators, this is a stepping stone towards then having the discussion about looking at the more structural, more fundamental pieces about completing the banking union. And this is something, my understanding is that legislators discussed, let's finish this piece first, and then we can take the next step onto the banking union debate. So hopefully we will see that discussion then progress in coming time.
One other thing that I would like to discuss with all of you is the situation of non-systemic banks. I'm looking at Cindy. You have a number of non-systemic banks in the Netherlands that you are looking at. What can you tell us about how they are embracing the resolution mechanism?
If you don't mind, if I can make a final comment just on, let's say, the barrier to the banking union, because I wanted to underline what Hector said in terms of political will. I think what we also need is the realization that in the end, also a complete banking union will never be a perfect fit for all. And so more integration, more harmonization, which we fully support, will in the end, by definition, lead to different outcomes in different member states, given that we have different economies, different institutions, different legal systems. So that's something to reckon with. And so in the end, we need to have the political will to build the backbone for the greater good, but it will never be a perfect fit. In terms of the less significant institutions and what we do in that area, I think it's fair to mention that in the Netherlands, we do have a number of medium and small-sized banks. It's not a huge number, I must say. There we have a similar process in place and strategy, which is very much aligned with the strategy of the Single Resolution Board. So over the last couple of years, we've built on, let's say, getting the strategies in place, the processes, but also there we are now in the phase of more operational testing, deep dives, on-sites, etc., but of course in a more proportionate way. Yeah.
Priscilla, question for you in your role as European Association of Cooperative Banks. Are your members seeing tangible progress in terms of how the system is, how the framework is applied for them?
Yes, and where the progress have been seen is for banks not being in the scope of resolution, but plan to go to liquidation. It has been very set a clearer way, and for them it has been simplified in their reporting obligations, etc., which is a great improvement. I also mentioned it earlier, but we say it again, that in the cooperative recognition, I mean, in the way that we've been understood, that our specificities are being understood, the improvements also have been seen, and it's a really good thing. However, there are still, in some cases, that some members have felt the envy to push for change of organization, and we don't believe this is, I mean, you cannot ask a bank to change from cooperative to another type of organization. And also, as I said, the size have been taken as a proxy for risk, but it should be more refined, and it's not only about size, it's about also, and much more about the risk profile, which needs to be taken into account.
Has this resolution mechanism in the last 10 years, has that forced some of the smaller banks, the less significant banks, to embrace a different business strategy?
No, and it should not. But in the course of the discussion, this tendency has been felt for some members. But this is something that we should avoid, because it's not. It should be neutral as the way the banks is organized, and I mean, at the governance of it. If the governance is not a factor of risk, of course. But this is important in the discussion we have with the authorities, be it, of course, the SRB, but also the ECB.
Hector, a question that springs to mind for you. I mean, you see the discussion on the lesser significant institutions, the smaller banks in Europe that are complaining about all the things they have to do, that you as a GSIB actually do without complaining. How do you see this discussion on the lack of proportionality?
Look, I mean, it's always very complicated to the fact when you're a GSIB and you participate in many countries, you don't just have to comply with the EU regulation. You basically have to comply with every single regulation where you play. And that makes it very complicated. And what we are basically going through is a scenario in which also the regulators basically want to check you in every single side. So there are sometimes situations in which we end up with, I wouldn't say over-regulation because that's not the word, we end up with a situation in which we have to comply with many things at the same time for many different instances, and that's very complicated to comply. So what is been going through, and I believe that here in Europe we have been able to achieve, is that there is a lot of comprehension of what we need to basically work with, because we have, I mean, different bodies of and different situations that we have to comply with. The problem is when you go outside, and that's the really complicated part. And it's an important burden, not just in the amount of money that you have to invest in order to comply with it, but it's also quite important the amount of resources that you have to apply to it, which is very complicated. I think that people are understanding, and regulators around the world are understanding the particular situation that we have, and supervisors as well. But nonetheless, everybody wants to be sure that things are under control. And that basically provokes a really complicated scenario in many ways. What we do really need to do is that create a framework that really makes it trustworthy for everyone. The way we homogenize, in a way, what we do every single day, that basically will help us to manage in a much better way. On the other side, it's very important also that we have a very simple but credible framework that can withstand the market shocks, because that's very important. We never look at these particular situations until you have a shock. And that's when you really have to be on top of things. And also you need a lot of flexibility and a lot of teamwork between the banks and the authorities at the same time. So it's a two-way street in many ways.
And of course, a framework that underpins the financial stability, which is one of the ultimate goals. I want to give you the chance to have a final comment before we go to the next part of the agenda. And basically my question is, and I'll start with Cindy, when you look at the framework that we have in terms of banking union, we discussed that because resolution is part of that. But what is the one thing that is worth fighting for in the next few years?
I'll keep it short, but I think the one thing that is worth fighting for, and it already came up in the other panel, is I think a credible common backstop for liquidity. I think that is something that we have advocated in the past, and we still do, and we're keen to work on this. Yeah.
What is holding up the discussions on that credible backstop?
Well, I'm not sure whether it's exactly holding up, but I think in essence, of course, the first line of defense is liquidity at the institutions itself. Of course, we have the single resolution fund, but in the end, for, let's say, tail risk events, it would be good to have a backstop. And I think on all those layers, we need to get the mind at the right direction. Yeah.
Priscilla, the one thing worth fighting for?
Always better serving our customers and to see how all this framework is at the end serving the customer in its safety. As it was said by Claudia Bo, and of course this is, when you're a banker, this is what you think every morning. How can I serve better my customer?
Are taxpayers customers?
Sorry?
Are taxpayers customers?
Of course.
Yes, Hector?
I would agree with Cindy. I think that liquidity backstop is of the essence. That's something that we require. The US, the UK have it. That's something that we're lacking here, and it will help us quite a lot to get it. And also, I mean, as a plus, I would say, I mean, simplicity and credibility in the framework that we have. I think a lot has been done, but I think that we need to work together in order to enhance it as much as possible.
Karen, liquidity backstop, what's the progress on that?
I want to be ambitious, so, it's not the one thing that's worth fighting for. It's overall getting us over to the next layer of integration so that we have mutualized deposit insurance, liquidity and backstop, and then real structural reform to help, reduce some of those other cross-border elements. And while I can add to the wish list, then also staying open to then think about innovation and making sure that the system works to the overall innovation, the overall developments in the system.
Thank you very much. It sounds very much like we've started a journey in 2014 with the creation of Banking Union, and that will undoubtedly go on with lots of new steps in the next few years ahead. Thank you very much to the panel. A big round of applause to all the panelists. And back to Susan. Thank you very much. Thank you. Thanks, Hector. Thank you. Thank you. Thank you. Thanks, Cindy. Thank you. Thank you.
Thank you very much, Raymond, and all our speakers this morning. Now we're going to take a moment to pause and reflect. The SRM is marking its 10 years of safeguarding financial stability, of course. We want to take a look back at what's being achieved and forward to the challenges ahead. Many perspectives have shaped our journey, from the people who helped build the SRB and the SRM to the policies that were forged along the way. And we talked to a few people about their experience in the SRM and what's important to them. So please turn your attention for a short video looking at our anniversary. Thank you.
The SRM in one word for me is committed.
Reliable.
Ambitious.
Resilience and cooperation.
Anchor.
An effective, credible resolution mechanism for Europe.
Fire brigade of the banking union.
The main highlight in the SRM is the SRM itself.
The SRM is actually the second pillar of the banking union, the resolution mechanism, which we didn't have 10 years ago.
At the beginning, the whole project started from the legal basis and there was nothing else. We worked intensively with many other services from the European Commission, creating a resolution or supervisory culture.
Building all the relationships between the national authorities and Brussels and also internationally.
The building of a robust framework for managing bank failures across the euro area.
Now, when I look at the SRM properly staffed across the member states, it is a fully fledged, mature institution.
Today we have 21 national resolution authorities, members of the banking union.
The building of the single resolution fund, we have managed to reach its target levels.
Build up the fabulous MREL. minimum requirements for eligible liabilities, and our first resolution in 2017. It was excellent cooperation, and we resolved the bank without harming the Spanish taxpayer and without any impact on financial stability.
Resolving Banco Popular, such a large bank without any hiccups, was a first true test that the Single Resolution Board passed.
There might be a need to focus even more on crisis preparedness.
We need to develop even more cooperation than before. This is one of the key lessons of the past.
Over the past 10 years, taxpayers in Europe owe the SRM a lot. You ensure stability so that their money is safe.
Resolution processes are complex and time is crucial. Live testing with relevant banks is key. This is why we are shifting our focus towards more comprehensive tests in business as usual to be best prepared for when a crisis hits. Because in that case, we should not allow any mistakes.
At the beginning, we didn't really know what resolution was going to look like. So the framework was essentially theoretical. It abides very closely with international principles, but it is very detailed because we were trying to anticipate all different types of scenarios and situations that might arise. Now, what you find over 10 years is that while the broad lines of a resolution are the same in each case, the details of the resolution can be dramatically different. So I think if it was one thing I would like for the framework is just that little bit of extra flexibility to allow the authorities to adapt the framework to the specific situations they find themselves in.
There are three aspects to how the SRM is adapting to emerging risks. First, being ready to deal with surprises in crisis management, in resolution planning. Second, make sure that we think about emerging risks and new developments in our priority setting. And finally, drawing on our experience as an operational agency to also help inform discussions in the wider society about how we might need to evolve the framework to make sure that we remain ready no matter how the situation evolves around us.
It's really important to have a credible resolution mechanism, which we currently have also for us as supervisors, because it changes the incentives within the banking sector when it comes to the going concern, the day-to-day activities of the banks.
Without a common resolution framework, the cohesion of the banking union would be at risk, undermining both the single market and broader financial integration across member states.
Now for the next decade, the job is about really making banks resolvable, operationalize the resolution plans.
We work for one purpose across Europe, a safer and more resilient banking sector for Latvia and all Europe.
To the SRM, may the next 10 years be successful.
Just as successful as the past 10 years.
The united in diversity.
Essential to ensuring the sustainability of our economic and social model in the EU.
Marked by a robust financial system.
Being bold in vision, confidently and without compromise.
As bold and even more efficient than the 10 first ones.
Thank you very much. And I think here we had a recollection of testimonies telling us how important this event is for us today. So let me say that this 10th anniversary is the right moment to thank all those who've contributed to building our solid foundations. So obviously, and you've seen some people coming from the very first steps in the building of this single resolution mechanism, coming from the European institutions, the Commission, but also the Parliament, the Council, for their political leadership and continued excellent collaboration. the national resolution authorities, obviously, members of a plenary session of a single resolution board, and all the members of the SRM family. And I see a lot of you today. Thank you to be here with us. The other authorities we've worked with and learned from, and again, we've seen during the first panel in particular the presence of Dave, and we insisted about the relationship with all other all colleagues around the globe, in the US, in Asia and elsewhere. We need also to mention the banking industry. It was said during the second panel, the banking industry is exactly part of the story by building its own resilience and in its own resolvability. And of course, the staff members working in the SRB and in the SRM broad sense, the National Resolution Authorities teams included, who have put in so much effort and enthusiasm over the past 10 years. So to all of you here in the meeting room, online, all of you who are not perhaps today with us, thank you, and you can be proud of what we've achieved together by building this single resolution board and mechanism all together. And we have today a very special group of people, the SRB permanent board members who have served at different times over the last 10 years and have made an enormous contribution for building the single resolution mechanism and in particular the single resolution board. Let me make a special mention for somebody who is not here today, unfortunately. Chair Elke Koenig, you saw her during the video, and she played, obviously, an instrumental role. Unfortunately, she could not join us today due to other commitments, but as you just saw, she gave us our thoughts in the video, and we remember her and her achievements today. I would like to insist here. But the other former board members are, I think, more or less all here. And it will be a great pleasure for me to welcome them here on this stage, because I think it's a nice moment to celebrate this 10th anniversary. So please, former board members, join me here on the stage, with also the current board members, because obviously it's not because you've finished your mandate that the others are not working. We are still continuing to work together. And so I would like the former board members and current board members to join me here. So please. So here you have the first generation of board members, the second one and the third one, I think, after these 10 years, with some overlap in terms of mandates. Obviously, it was complicated. You recognize some faces. Some members were already participating in the previous conferences, and these are the members due to who we have today, the strong resolution board we have today. So many thanks for your commitment. Many thanks. I should go. Yeah. And we have a special gift, you know. We have a special gift, which is a medal, the medal celebrating the 10th anniversary. So it will be my pleasure to offer you a medal personal to you. Timo, please. Sebastiano. Antonio. Jesus. Joanne. Pedro. Jan Rein, the longest serviceman. Slavka. Well, it's an exercise, huh, for me. Bastian. Karen, we saw you a minute ago. And Radek. And myself.